Let me first ask you what your thoughts are on the coronavirus thus far. Clearly, the markets have taken it badly over the last few days, but you still believe we'll see a V-shaped recovery?
I do still believe we see a V-shaped recovery because we heard before that actually China is leveling out the new rate of infections. And if we look at the side, that means supply side is disrupted, but the demand is still there. And now if that whole thing is recovering, I hope so in China, then we can expect that the supply side is recovered and the demand, which is not satisfied currently, will be satisfied in the near future. Now the big question with the outbreaks or with the increased numbers in Europe is, will that really also reduce the demand, or is this pending demand, which is still there? That's why we believe the V-shaped recovery is coming. Will that be disrupted because of the new cases? Currently, if we look at the data and the leading indicators, we do not see that, and that's why we have no reason that we should change scenario from V-shape to U-shape or L-shape, because we have the time to recover on that, but that has to be monitored daily.
Christoph, good morning to you. You say in your notes that the World Health Organization has not declared this a pandemic, which is, of course, true. But we do sense getting ever closer to that. If they did call this a pandemic, a global pandemic, would that make a difference to what you have outlined there? Or is that not an event that investors need to focus around?
The moment we see that consumption is suffering, the moment we will change our view and that demand is falling. And of course this can turn into it, but currently we are not there. And if we want to make a proper assumption, we have to have more data. Currently the data we see does not make us believe that the pandemic is already there. Of course the likelihood is increasing, but it's not there, and we agree with the WHO. But so far there is no view for us to change our position with the V-shaped recovery.
Christoph, if I think of Switzerland as a fantastic place to go and a safe place to be as an investor, what happens if these markets panic? Do people pile into not just the Swiss franc, but other real assets and public markets in Switzerland?
Yeah, of course. I mean, the Swiss franc will be safe haven. I mean, they will buy gold. But now this is a little bit cynic, but out of the analysis we have, one of the biggest contributors for economic growth in Switzerland is the pharmaceutical industry. Given that circumvents we have now, we must say that the sector mix we have in Switzerland is also a little bit a hedge for the economy we have in-house. And also when the Swiss franc is spiking against other currencies, this is actually not so bad, because this makes sure that Swiss companies still are competitive on the cost side, on the cost structure, on the innovation cycles. So that's why we see Switzerland as one of the most defensive markets besides the US, which has a robust economy, which has a major contribution out of local consumption, not as an export nation. So that's why we favor Switzerland and the US market.
So are you buying this dip then, Christoph?
No, we did not buy the dip. What we did now is that we increased our Swiss equity position. We sold European equities because we think the European market is more vulnerable, because the margins and the earnings side of the European companies are not as good as Switzerland or the US, for example. There we buy more in the bond market into it, but we'll stick to our strategy, and we do also advise our clients to do so. Have faith in your strategy and stick to your positions and make arrangements to get a more defensive portfolio.